Welcome to the Chaim Investment Advisors podcast. I am Chaim Victor Schramm. I am here with Pablo Lasha,
That's
and
right.
tonight we are talking about Bitcoin versus gold versus inflation,
That's
aka
right.
Bitcoin or gold as an inflation hedge.
This is the WrestleMania of finance, folks.
Right? Yeah, this is
you know, we
perhaps our probably second most controversial video next to the one we did a few weeks ago.
yeah.
Yeah.
Well, one of the funny things is we talked about this a bit before in the early podcast. Is oftentimes the people who are like, I like Bitcoin because it's like virtual gold, which we're going to talk about a little bit in this podcast today. And I think that everyone can draw their own conclusions, but I think the answer is it's not really virtual gold. Unless, we'll get into some of the data there and like why that. But also one of the funny things I find is like the people who, and I have nothing against Bitcoin, the people who always say this, always about the intrinsic value of gold. Well, I mean, Bitcoin literally has no intrinsic value. There's like, to my knowledge, no like large market of smart contracts on Bitcoin. If you're going to make that argument, you would make it for something like Ethereum or Solana or something where there's actually intrinsic value. Bitcoin, other than you paying for like some strange thing on the internet, like pay for my like Twitter handle or Twitter follows, whatever, like doesn't really have a lot of intrinsic value. But so we're talking like really about like hedging against inflation. We had a podcast on inflation. Can you tell us a little bit about hedging and like explain that a little bit? So.
Yes, we should start by saying what hedging is and what you got to do to have an effective hedge. A hedge is something that does well relative to both other assets and an economic event, such as inflation, such as a recession, uh, such as deflation, scenarios that would be really damaging systemically to a lot of assets in a diverse portfolio. But you want something to kind of stand out, do well, be able to give you better liquidity than other things at the moment that that is happening, which is a consequential point to our discussion today and how well both or either of these have done related to that.
Yep. Yep. And I think that you touched on the most important fact there, which is that like it has to be doing well during the thing that you're trying to hedge against, right? So like
Yes.
if it goes through the for instance, looking at Bitcoin, we're looking at the charts, we're looking at S&P 500 validated Bitcoin, and you're like, oh, you can see it's just like a nice downward trajectory. It's just like really going down, and over time you see like it's just like the trend is down. It's like, well, yes, but like when you're hedging, you're trying to fix a specific time problem. If you're gonna like go through the whole cycle, then everything's a hedge.
Right.
And it's like,
Right.
and it no longer matters. Like,
Right.
so yeah.
And so yeah, we can talk about why is it that financial assets versus real assets do so differently during inflation, because we actually hit on this before in our episode about stocks and inflation, and
Right.
we were right about what we said in that. We basically called that, and just you can go back and watch that episode. It's actually a pretty good one. But what we talked about there is that returns of financial assets, that you have a right to a series of cash flows. The cash flows matter. The purchasing power of each one of those cash flows actually is a core pricing function
Right.
of the asset itself.
Yes. Yes. I think that this is one of the things that people often don't think about because they're like, hey, I bought a stock and growth stocks are so popular. I think one of the reasons growth stocks are so popular is because people kind of think of it like a little bit like speculation, like, oh, if I pick the right company, it's going to grow and it's going to be worth a lot. But like the main reason that you have a business, because eventually there's going to be like, there's a cap on like how large your business can grow, is that it's going to give you cash. That's like important.
Yes.
And in fact, when you're doing growth stocks, all you're doing is reinvesting the dividends back into the company. That's all that's happening. So you still should have some idea of like future cash flows and what the thing is worth. Just
Right.
hoping that the company is going to grow is not like necessarily the best way to value.
No. No, yeah, definitely. Historically, actually, has not been a fantastic strategy.
Yeah. I mean,
yes.
it's really the cash flows and knowing the time value of money and being able to look at like a stream of cash flows is, in my opinion, I think in kind of been one of the best ways that you're going to, fundamental ways you can value any sort of business, whether it's like a public traded security or it's your business or whatever it is. And ultimately, your business needs to be producing cash.
Right. And so that's the world of financial assets. And when you just think in abstract about like, okay, what would happen in high inflation to something that's a series of cash flows? Well,
Yeah.
the asset's worth less today as a consequence. And it's been true for bonds too. The bonds also have suffered, even though and that's confused and freaked a lot of people out. They go, I can't understand why that's happening. It's actually the same phenomena. It's just we haven't in America had that moment. They go, well, every time stocks zig, bonds zag. Well, they're both zagging for the same reason. A fundamental cash flow pricing, time value of money function. And so they have the same problem. And that, to me, describes why that correlation is so tight this time between stocks and bonds, where they're doing the same thing.
Yeah.
And that's financial assets.
And they're going to be lagging. They're not going to be like one of the things about inflation, one of like the dangers of inflation, right, is that like your prices are lagging behind the rest of inflation. Like it's not like you're not setting the trend. And so like if you're getting these cash, it's unlikely that your cash is your cash flow is setting the trend for inflation. And so it's just it's not great. But that kind of brings us to the point of like why commodities and gold in particular perform differently. And so why don't you tell us a little about that?
Right. So they don't have a cash flow. There's no intrinsic cash flow to them. So they don't have that tethering to price sensitivity in the same way for the asset to a series of cash flows in the future. You can't do the same equilibrium pricing for commodities that you can do for other assets, where the equilibrium price, or what it should be, what the market kind of reasonably lands at, is a representation of those cash flows. Here, the equilibrium price is its utility, how it's going to be used right now and going forward. And that actually tends to have a very strong relationship with inflation, no matter whether it's an industrial commodity, something that's built, used in building, which can be economically sensitive, but it's still copper is something I'm thinking of as I'm saying this, or precious metals.
And if you think about it, here we can go back to that, like whether it's lagging or not, it is higher up in the food chain in terms of pricing, because it's like you're using these resources to produce what you hope to be, some sort of cash flows from business, So like we could say in gold, the cash flow is you bought it. That was the cash flow and it went out. And when you sell it, it'll come back in, Right. And so, I think that you touch on like some great points there. So then I think maybe we could just discuss a little bit real quick about Bitcoin and why, and this is one of the things you may be able to help me with, because I honestly don't know why people think that Bitcoin is like gold. When I hear that, I think it has to be based more on a cultural thing than any sort of economics, because nothing about Bitcoin is like gold.
Right. It's interesting. My perspective on it has been that Bitcoin's original thesis of value, when people I think we both followed the journey of cryptocurrency since early.
Yes.
And early on, the idea was, well, Bitcoin's the payment system of the future. It's like PayPal 3.0. That was the idea.
With higher fees. and a little bit slower.
Yes, it's slower, higher fees, but it can't censor it, right?
Yes.
And so that was price theory one, and that came back down to earth, right? We had this huge run up when people were very excited about that idea up until 2017, and then people started to say, "Well, nobody's using it though." And so, that and other reasons led to Bitcoin collapsing
Yeah. Well, and like,
precipitously.
so there's something to touch on there. So, like, let's say when this is something we see, right? When there is inflation, what do people want to do, right? They need to sometimes they need to get cash. They need more cash because things cost more money, you know. So let's say I got like some gold and I also have some Bitcoin. I sell my Bitcoin and I get the cash. Everyone else is in the same boat. They also would like to be getting cash, right? So there's no like the intrinsic value really comes into play because it's like, well, nobody wants to have the Bitcoin right now. You know?
Right.
Whereas like
Yes.
with gold, there's going to be a limit, even if I sell it to get cash and someone else sells to get cash. There's going to be somebody out there who's like, well, I do need the gold actually, so I need to like. There's going to
Right.
be a price where it's going to be like you can't go below that price. And I think we're pretty bullish in general on the future of cryptocurrency.
Right.
But like you said, the blockchain technology and Bitcoin really had that. Like one of the things I think I often heard people say is like, well, there's only going to ever be a limited amount, and it's like, yeah, I can make a limited amount of IOUs, Pablo IOUs, and that doesn't really mean much, you know.
Right.
And there's been an evolution for other cryptocurrencies where they have smart contracts and we're able to have like decentralized finance and decentralized apps and all those other things, which are really cool, you know. And like even though it's still a nascent like sector, like it's just like it eventually will work itself out, and there's probably going to be a lot of technology on there. Where on the other hand, like Bitcoin, I have used Bitcoin to pay for something. I don't know what it was. I think I didn't want to give my phone number to Twitter or something. I mean, like Twitter was like, yo, what's your phone number? And I'm like, I just pay this guy to like get a code or something. It's like $5. And then Twitter just eventually like shut down my account. Like, you're not going to give us your phone number? We're shutting down your account. Oh, okay, whatever. Dude. Like, wasn't that important? But they probably have my phone number. I don't know why they wanted it again. But the point is, like, that's like the essence of what I use. And it wasn't easy to use. I wouldn't say it's terribly easy.
Right. No, it's not.
And it was slow. And like just compared to some other like cryptocurrencies, it just like was not a fun experience at all, And so there are these people I think who are bullish on it. Like I think you and I we discuss and talk to these people. Like many people are bullish on it, but the enthusiasm is all really of the intrinsic value that it has, because there aren't like a bunch of people developing smart contracts on there, except so
Right.
It doesn't even have the cash flows that stocks do. So it doesn't really things that you want to hedge. It's not like unless everyone else also is enthusiastic, it's not a good hedge. It's only as good a hedge as the enthusiasm. And one of the natural things about like inflation and deflation when you have these serious trends is that people are immediately like not enthusiastic about certain things. They're trying to like look at fundamental value because they're trying to get away from like, oh, there's like too much I don't know, like the word I forget, but like there's just too much like energy around this, too much like it's too emotionally driven. It's not driven by like fundamentals, so it doesn't make it a good hedge against like inflation.
Right, because one thing that Bitcoin never will have that gold always has, and why I tend to be more team gold. I think everybody knows that who's ever watched this channel. Is that gold has utilities in the real world. Like there's demand for usage of it that go beyond people wanting to use it as a financial instrument, not an asset, but an instrument. There's jewelry and there's making computers that we're talking on right now.
The argument is always made that like, hey, like gold is just a shiny rock, but it's a really nice shiny looking rock. Right. Bitcoin is not. So like,
right.
you can't escape that fact. Yeah, and you're right. Also, just like gold is used in many other technologies, like gold is used for computers or some sort of like IT or like I'm pretty sure they use gold when they're like building NASA's building like space shuttles, etc. There are certain times where you need, and this is true for like all commodities, like you were saying. So this is what makes it a good hedge against inflation, right?
Yes, and in terms of censorability and all of that, well, one of the negative things that's happened in recent times with Bitcoin has been governments around the world deciding in various formats to discriminate against it or ban the mining of it or ban the usage of it. And they apparently can censor. That gold is much harder to censor in the form of, nobody has to know you have it, right? And so
I think you touched on a good point. So like one of the things that like the cryptocurrency like world has to overcome is, for most people, in order to get money onto a chain, whether it's Ethereum or Solana or Bitcoin, for most people are going to have to do a centralized exchange, which is,
on or off ramp, you're right.
Exactly. And then, like, this is my opinion, but like, it's essentially like a bank. Like, they are know your customer. If anyone out there has done this, that like you're gonna have to like show them your passport and your ID, and then you're gonna have to like take a picture, and they're gonna have to like see your face, and like by the time you're done, like you're in so many records, it's like it's ridiculous, And it's kind of a little bit antithetical to the nature of cryptocurrency in terms of like decentralized. The point is to not have a centralized place, and so until they have like a better way to pay for stuff, you're going to have this issue where like you can't get your money back, into the real world without like there are some peer-to-peer ways, but they're expensive and you pay a lot for them. And I imagine that you might suspect that you pay a lot for them because a lot of the people who are doing that are probably not all on the up and up. So until you have like a mom and pop store thing where you can go in just like merchant services like debit cards, etc. You're going to have this system where like you can be discriminated against, And so It has a ways to go before and I think that's also, to be honest, like you and I probably agree on this, like that is what a lot of those governments are actually afraid of. They're really concerned that like one day they will not be able to track the money. because cash is king, so the money is important.
Right. And that's where the comparisons never really made sense to me. It's not necessarily, to me, digital gold, and I think that trope came about, or meme, as you will, probably more appropriate, when people found it very difficult to say, "Oh, Bitcoin's the payment system of the future." Well, it's fairly obviously not.
It's not the payment system.
It's fair, it just isn't. And so people became really enthusiastic about the idea of like, well, we'll call it digital gold, and that'll be a whole new thesis of value for it. And that hasn't actually gone all that well for Bitcoin.
It's now no longer the payment system nor the digital gold.
Right, because when you talk about, okay, what really happened this year with inflation, with gold, with Bitcoin?
Yeah.
Bitcoin, as of the time we are recording this, is down 48.48% year to date, and year over year is down 48.59%. And so not very good against inflation, given inflation's up 8.5%. The gap there is tremendous.
Ironically, like other blockchains with their synthetic securities or synthetic assets would have been better ways to hedge against inflation.
Right.
Which is probably like a little bit of a story for like another podcast. But like one of the and we're not making any endorsements here. One of like the currencies that we have both used in the past is Solana.
Right.
The ease of use is like when I go to use Solana, it's like it's like I don't know, like how like it's just like a huge pain relief, because like it's like imagine you're just doing this thing that's so complicated and so hard, and the gas fees. I went to like trade something on Ethereum, and I was just testing it out. I want to show someone else how it works. I'm going to trade this dollar. Like, I'm going to give you this dollar, and they wanted $2.50 to trade the dollar. And I'm like, okay, well, I'm going to show you it on Solana because that's only a 2 pennies, less than pennies. It's like a thousandth of a cent or something,
Right.
And so there are other places like that. So I just thought it was a little funny. Like you could have got like synthetic securities, synthetic assets, which would have been like better against hedging. So we can like confirm that Bitcoin not a hedge at all against inflation, really.
Right, yeah, because coincident to the time that you wanted to go get your money in this thing that's, yeah, kind of hedged inflation. Well,
Yes.
it's lost actually tremendous amount of money,
Yeah.
and now you definitely don't probably want to sell it when you have to, or you're really giving up on Bitcoin.
Yeah.
And hopefully a hedge does the opposite of that. And gold has kind of had not a terrible year for gold because gold's standard deviation, which just means how much might it go up, might it go down in a year, is pretty high. It's double digits. It
Yeah.
is sometimes as high as 19 or 18%. And so the fact that it is up 1% year over year for gold, that's really bad about half, right?
Yeah.
Yeah, it hasn't actually lost nominal money in the last year. Has certainly performed much better than Bitcoin, and uh, has actually outperformed stocks as well, which is important because stocks, if you are looking to go get something of value that's a little bit more liquid against inflation year over year, actually gold this year did outperform stocks by double digits. The
Yeah.
stocks right now down 11%, gold up 1%.
I think we
There's
talked
a pretty
about
big gap there.
we had this that was kind of our prediction when we had previously talked about inflation,
Yes.
with the nature of where
Yes.
things are headed, and we did talk about like this, like this basically revaluing assets in the financial markets. So that was
Right.
a good podcast.
Right. And so I think the big takeaway comparing gold, Bitcoin, and inflation in this conversation is if we're saying the whole point of commodities being linked to inflation is that you can price the product that you're going to make from that commodity in current dollars with inflation, inflated dollars tomorrow,
Yeah.
that works for gold. That doesn't work for Bitcoin because you can't produce anything with it. And that's
Yeah.
part of why that relationship hasn't existed at all in the way that it has existed with the industrial commodities. So we're talking everything you use to build something probably has done a little bit better than stocks, or has at least had a higher correlation on a month over month basis to inflation. Many of them are doing very well. Energy commodities, that's the thing that's won this year.
I think one of the
really made money.
one of the things I saw recently that like and I maybe misinterpreted, but I think I read this correctly that like some people were saying like, oh well, now we're off the track of inflation and things are getting better. And I think that people forget like, yes, after inflation comes deflation. That's the nature of like how the pricing is usually going to work, right? I mean, like naturally, if you're no longer accelerating at this rate, then yes, things are like slowing down and pricing is like slowing down, and you're going to have things cost less, right? That's just like how that works. So that's not necessarily, you know, it's like what goes up must come down. That's corrective behavior that's just like intrinsic to the system. I wouldn't say that that's like some sort of great policy that the Fed has taken on or anyone else has taken on. So
right, yeah, deflation. We will see what happens with that or how fast, because we were very something that we've talked about for a long time. And we actually, one of our first ever podcasts was about deflation because
yeah.
I think our first ever podcast was the oil deflation where it was
Yeah.
negative pricing because people were asking us like what the hell happened, somebody explain this to me. I think that's our first episode or one of the first ones,
Yeah.
and that was all about deflation, and we talked a lot in those kind of early discussions before inflation about how close we kind of tend to wobble to deflation in modern times. It's pretty close. And we've talked about it, that demographics episode that we did. Demographics and interest rate, also a good one to check out if you're interested in that topic. Like we really covered in depth, like the relationship with America's demographic and economic, our macro conditions with deflation and how they kind of flirt with each other. So that's kind of our baseline, really, is to be kind of a little bit close to deflation anyway, if not outright. And so, to your point, if that's the norm and we reconverge on the norm, well,
exactly. Yeah, I mean that's just. Yeah, so that's natural. Like, I mean, like really, in like like I think the point that people were trying to make is like, oh, we've corrected like behavior. No, it's like, no, maybe you just stop doing the thing that is causing the problem. That's enough to like get things going back to norm. And it's one of those things that's kind of hard because I think I've talked about this before. There are certain things that like you can't make right, but you definitely can screw up.
Right.
And in macroeconomics is definitely one of those things where it's like it's hard to make good macroeconomic conditions. Things are going to happen that are just going to happen, but you definitely can screw them up through policy.
Right.
And so really, when we're talking about it, we're like there are things that like could have been done previously about raising rates and like the sort of lag in raising rates. But really, what we're talking about is like just stop screwing things up. And things aren't going to start to fall naturally back in line. We see a lot of prices. I think like, we, I don't know if we discussed this before, but, car prices were like super high. I was talking to someone, I actually like convinced them to like, I was like, you can just trade in your car right now. And like, he looked at it and he's like, I'm going to make like, 20 extra % trade in my car than like when I bought it, And sure enough, like, I was like, do it now. This is like about 4 or 5 months ago because like these car prices are going to come back down. And now we've seen like, 30% reduction in car prices. And this is like, again, like you said, like, if we're returning to the natural state, this is what you would expect. This is not necessarily like, oh, we've done a good job. This is just like you stop messing it up and like we're gonna see this like convergence,
Right. We're gonna complain about the stuff we were complaining about before. Once we're done complaining about right now.
Exactly. Yeah, exactly.
Getting everybody ready for those episodes.
Yeah, exactly. Yeah. Then we can talk about like those. But I think it's like, I think that like that's a good synopsis, right? I mean, like that gold, and it makes sense. I mean, like I always think it's funny that people think that like they found something new, or there's a new way to do things, or there's new like oh, we're under this new economic regime, and it's not really like how it works. I think I was not like a really big fan of massive spending because we know that like like people are rational actors. When they see this massive spending, they think their future stream of payments from their bonds is not going to be worth as much, and then sure enough, just by them thinking that it's not worth as much, And so, like that's been known, and people come out like try to say, oh, we have a new way of looking at things, and it's like, well, it's unlikely, And it's the same with gold. Like we always had this idea, I think, in finance that gold is a good hedge, commodities are a good hedge against inflation. And well, what do you know they are?
Right. And silver, which we didn't mention, actually technically this time around was a slightly better hedge statistically. Its correlation to inflation was actually stronger. So, your Mercury dimes, if you got those, or whatever you got, that's a mirror of my daughter's favorite silver asset is Mercury dimes. Shout out to Amira. But so those traditional assets, that hedge inflation really did that this time around. And real estate, if you had individual real estate, that actually was also a pretty decent hedge. It wasn't as strong as gold, actually. It lagged the correlation to inflation. With gold did better, silver did better. Real estate did kind of okay if you held individual real estates. Then if you owned real estate trusts, which a lot of people do who listen to this podcast, and I certainly recommend them pretty often.
podcast on REITs, in fact. So if you guys don't know what those are, go back and check that out.
Right. We've talked about REITs a couple different times because we talked about hotels, which we should do another hotel blend sometime because people still ask about our thoughts about that.
We both really like hotels.
Yeah. Yeah, we're both hotel people. We're going to be hoteliers.
Yes, that's right.
But yeah. So real estate trusts actually did less well than not nearly as bad as Bitcoin, but it's not as bad as stocks. It was right in the middle. And one idea that I heard about that I haven't actually had the time to like dig into the statistical data on this exact point, but one idea might be that real estate trusts are also just cash flow. Much
Right.
a bundle of cash flows, just like stocks are, and so they might resemble stocks a little bit more than they do individual real estate this time around with these conditions. That kind of makes sense, but gold outperformed those as a hedge for sure as well this time around. And so, yeah, that stuff's really held up. Bitcoin did not. And who knows what will happen next time around or what happens to Bitcoin. It could go up 10,000%. Who knows? But gold has a large demand base outside of the United States, just like Bitcoin does. But that's another thing that American investors and American audiences sometimes forget is that gold's biggest markets in the world by usage on a per capita local currency consumption basis, they actually are like India, China.
Yeah.
You know what I mean? Like India, China are way bigger utilizers of gold. And so you have these large demand bases in also places like Turkey. Turkey, gold is an extremely popular asset. Some places around the world outside of Asia and North America as well, big fans of gold. Yeah, so you have this huge demand base that's outside of the dollar too. And so much like we've talked about with cryptocurrency, where cryptocurrency sometimes functions like a wealth index of the world, of the global middle class. Maybe that's why it hasn't done that well, because I don't think that the global middle class is really doing that great at this moment. From a global macro perspective, it's global macro is actually really shaky this year, with global GDP actually looking like it's declining for the year by at least a point or two.
And I think that there's a couple good points there, but I think that going back to as a rule of thumb, if you have to speculate on something, if you're doing speculation, it's not going to be a good hedge against inflation because by the very nature of speculation, you don't know what the price is going to be, and those things are not going to perform well in sort of chaotic environments where there's like a lot of inflation or even a lot of deflation. If you have any sort of just like the very volatile macroeconomic markets, you're not going to, and if you think about this intrinsically, you don't really want to be speculating because what do we all want to do when the markets are volatile? We want to like keep ourselves safe, and speculation is the worst way to keep yourself safe. Anyone tells you, you should speculate to keep yourself safe. No, that's like sort of the opposite. What you do when you're speculating is you take things that you can afford to risk, which is one of the reasons that when we talk about cryptocurrencies, we don't make recommendations. We don't talk a lot about valuations, or we may talk about sort of our thought process, but ultimately no one can know because we don't even know which cryptocurrency is going to be like the next Google or Amazon, or it's going to be around later. We don't know what kind of like applications haven't been thought up yet. So, it's a speculative market. And I think that's like, a really important part of why the cryptocurrencies have not done well. Like you said, maybe a bit of an index for the global middle class, which is also not doing well, unfortunately. And we did talk about this. I think we had a podcast, couple of podcasts ago. We weren't pessimistic, but we were just talking about the actual state of the world, and we did talk one about the recession that's not a recession. Undoubtedly, it will be a recession as soon as the NBER 3 months from now goes, okay, we're in a recession.
Right, or there was one.
Yeah, there was. That's
even
really
more likely to be.
what's funny is like yeah, because like it's true. It's true that like the NBR has always done this, right? But like and then they always like people call recessions, but people will be like, well, the technical definition is not like the actual definition. But I think people complain is that there's only been one time where we had the sort of technical definition that like economists use around the world, where the NBER was like there wasn't a recession, but then they were like it was surrounded by recessions. That time was surrounded on both sides by recessions. And so I think that like this is one of those academic things. They don't want to like go on record anymore. That we want to go on record being like, hey, go out and buy this crypto. It's just like it's not very responsible of us, and it would not be good for anybody if we were doing that. And it's also not good for like economists to be irresponsible. Right. Sometimes they're just waiting to see like, hey, we want to make sure this is a recession, but we can all like sort of see, like you said, using cryptocurrency as that index. But there are a lot of what we like to call buying opportunities. There's a lot of been a lot of loss in that area, and ultimately, and we talk about this a lot as like fundamental investors and having a fundamental view, which is that like you should try to understand what it is the thing you're buying does. If you're buying a piece of a business, if you're buying a crypto, if you're buying Bitcoin, whatever, you should have some thesis about what it does and why you need it, which is one of the reasons that personally I don't own a lot of Bitcoin. Because I don't really understand like the utility or the function. But I might use it, like I said, as a novelty or whatever. But I think that like if you stick to that instead of trying to gamble, you will probably be okay.
Right, and that's actually a very important point about commodities that a lot of people get wrong, who aren't specialized. Even in the finance world, people actually will frequently get this wrong, that commodities can be used by people who don't understand them at all to speculate, and that's different. It's not actually an intrinsically speculative asset, because it's the thing that like we eat and we build with and we drive with, right? Yes, so it's actually not intrinsically speculative. It's actually pretty close to utilization, right? There's an equilibrium with utilization that's not speculative. It just is whatever it is. But then people will speculate with it. So people go, but commodities are the most speculative. They actually are not. They actually are the most useful.
Right? And the place where people do speculation is actually, we talk about the futures market. Is actually that speaking of hedges, the entire futures market was created to hedge against price volatility. Yes. So you couldn't find something that could possibly be like, I mean, you can speculate with it, but in terms of just like the intrinsic nature, it's not speculative at all. Like the point of futures is that we get stable pricing for things, right. And again, like you said, you wouldn't have to know a ton about finance to be able to say like, oh, okay, like I see how these financial instruments work. So.
Right. And so, that's, I think a good coverage of the issue that, we had real assets that are used to produce. Yeah, they're tracking inflation and other things that aren't necessarily clear, like how you use them, even though they aren't financial assets. They aren't tethered to those cash flows. They can be pretty wide ranging in what happens during inflation. And that's what has happened. Fine art's an interesting one that it's a total standout, where fine art actually is doing pretty decent, much like gold, oddly, even though it doesn't have any utilization. That's an interesting one, although a much less liquid market. It's really like fine art does well when billionaires are still doing well, and billionaires are still doing well. And that's my description for why that is not. Because I know you talk about gold, Bitcoin, and inflation, somebody's going to be in the comments section about Masterworks.0 or fine art speculation. Oddly has done well, although I think that has more to do with people who are super rich are still super rich.
Yes. And
which is
I think
good.
that's it's an important thing. We want to shout out to the billionaires. You're doing all right there.
Right.
I mean, all joking aside, if billionaires are not doing well, like if you think this is bad,
I know, right? Yes.
find out how bad things get then,
Right. Yeah, then things get interesting. But
yeah, we like we often in finance we're talking about like there's like what things we can do to plan, etc. But we often talk about like the time when like no amount of gold is going to save you. When there are a lot of unfortunately there are a lot of countries which know this firsthand. That like you get into a situation where people get seriously violent, and you're not going to be coming to the kind of investors podcast trying to figure out if you can hedge against inflation.
You're listening on your Mad Max go kart. What did he say?
Yeah, you're gonna have more concerns about like where can I get water and ammunition so that I can.
Right. We'll still be broadcasting every Friday.
Yes, we will tell you. Well, yeah, I will tell you in the new economic regime, like what our best picks are. Yeah. Bottled water looking really good right now.
Bullish.
Yeah. Which is just like just in closing though, I did want to mention so I was looking for some bottled water. I don't know why. I just was like, I want to like find some different types of bottled water. And it turns out there's a website where the guy basically does reviews of all types of water, and it's pretty good actually. I don't remember like what it's called, but like it goes into like this was the mineralness of the water, and this is like how many people could have possibly touched the water. But the biggest thing that I took away was that there's way too many types of bottled water. I mean, it was like thousands of types of bottled water, and I was just like, I had no idea that there was this much bottled water in the world. Different brands with like legitimate, like they're distinguishing themselves from other, like we're not that bottled water, we're this bottled water.
These are value propositions.
Exactly. Yeah. So if you're like, hey, you have some time after this podcast, you want to do something funny, I probably Google that. You just like Google like bottled water reviews. It can only be one guy. I don't imagine there's that many. So
maybe I've seen that. I know that I did deep bottled water research when we went to China because I was told by locals before we even went.
Yeah,
there's a fair amount of lead in some water in China, and so you might want to find the one with the least, and that's Nongfu, or it was when I went there, which was good to know.
Yeah, no, that is good to know, and it is funny. Yeah, they're like, what really got me about the site is like it was like a review of. Oh, here it is. I think it's this. Like, is it? I don't know. It was like a review, like you review wine. That's basically what it was.
Terroir.
Yeah, it is right here. Like, I think it's called Fine Waters. It is finewaters.com. And it is basically like you're looking at wine. It literally has pairing notes, I'm pretty sure.
Oh, okay.
There's a Fine Water Academy, water and food, water pairings, water is an ingredient. No, I'm not knocking this guy at all. Like I spent a good amount of time on this website, so you know what I'm saying. I just found it very amusing. I was like, oh, he's got the water consulting. So if you're into that,
now that's a commodity.
Yes, it is. And there's a water tasting competition. I was really impressed. I was like, never knew. And I'll be like, what really impressed me is like actually one of the best bottled waters. I think it comes from. Let me mess this up. I don't know. I think it comes from Missouri. I think it's Missouri. So there's like a bottled water that's like it's really old. It comes from the spring, and they bottle it in glass or whatever. It's called like mountain spring water. It comes in this green glass bottle. Yeah. And it's like apparently one of the best waters according to this website. And I was like really impressed. So there you have it, folks. You've learned about hedging and you learned a little bit about water.
Excellent. Well, I think we've covered our topic.
We've covered exactly. And a little bit more.
And a little bit more, as always. We're always a little extra on the Kind of Investment Advisors podcast. And I think that next time we should do a more technical one because we've done a couple less technical ones on purpose
Yes.
because we got real technical and then we got kind of dark and then we're kind of lightening it up a little less technical. And next time we can get more technical once again because the people love it.
Yeah, indeed. So yeah, thanks. We appreciate you listening.
Yes, and we will see you next time. I'm Chaim. This is Pablo, and this is the Chaim Investment Advisors Podcast. Peace out.